Good afternoon. This is Chris Brecher with the Simpler Stocks free video for Tuesday, January 20th, 2016. It's about 11 minutes before the bell. Basically, today was one of these where you had to sell the rallies and buy the dips. And a lot of things are going on within the surface. Number one, you have that with 9 minutes to go, we have the ES is up 525. They were just down 1,000. Yeah, the NQs were down 40, are now up 1275. But this is the big thing that still bugs me. Look at the Russell down 960 and the transport's down 5 while the ESs are up. This is exactly opposite of what I'm talking about. You have to have the TFs and the transports start to rally while the ESs sell off so that divergence can sort of get back, it can sort of snap into gear. And what do I mean by that? Usually, historically, we've seen that the Russell and the transports lead on the upside and the downside. And the Russell has a habit of overshooting to the downside and then coming back. The problem is that what has made the SPX go down? There are three areas that have made the SPX go down the most. First, this is obviously holding up better than the Russell on the left. But these are the three areas that you have to look at, and where are they? TFs weekly. Broke here October 2013. Look at the BKX. I use this one because it's the most expensive. There are a lot of different ETFs you could use. I like this one. Broke down where it was in October 2013. Put in the transports in here. Broke down and where they were in 2013. Where would that put the SPX? Down at this area right here, under 1700, right in this area. Now, what I'm watching in here is that today, so the way to stem a decline is for all of a sudden to see the Russell start to really outperform in this area. Sorry about that with the Camtasia. There's some hotkey I have that messes it up. When you have the Russell in here and you have it sell off today, and that's been the thing to pull down the market anyway, for it to underperform so poorly and the ESs start to rally and ignore it at least temporarily is not a bullish sign. As you see, the ESs all day had held up and now they're up 425. The Russell's down 960 as I talk. This divergence has to change in a way where you have the ESs on the right selling off and you have the Russell slowly starting to go back up. Like you see, you have the Russell, the banks, and the transports acting bad again. Now, so what am I watching for going forward? Is this level right here. We're going to put the ESs on the left. I'm going to put the SPX on the right. Now, you might ask, why didn't we sell off more today? Or why have we ignored the TFs? Simple reason is this chart right here, the weekly. Check how oversold the ES is on a weekly. It doesn't have enough ammunition to destroy it yet. Last time the ESs down here with this oversold, we had a nice little rally in here. I'm not saying we're going to go straight up. I'm just saying it's very hard to finally have this just like sell-off. I've talked about this big old dump right here until this works off some of the oversold. Look at the ESs now on the right on a 15-minute, and put it on a 195 is actually the better one. And as you can see in here, it just has a little positive divergence. Go to a daily in here, and you'll see it's just at this precipice here. And the more that we chop around right here and work off this oversold condition, the more dangerous it becomes. This is the last thing, if you're bullish, you want to see. You want to see a washout down to here, reverse like these candles in here, and before you really have a sustainable bottom. The other thing that you have a problem is to go to component stocks and like the transports that you want to lead this market. Here's the transports, like I've said, and the transports and the SPX usually move together. As you see, the transports look very poor on here, but it's at support. The key is when you start seeing constructed development on the transports on weekly or daily or even 78-minute charts, some kind of of stabilization. And this is what bugs me. I'm going to put up here the transports on the left, and I'm going to link them on the right so you can see what I'm talking about. Here is obviously the daily that looks in plummet mode. Obviously, it's gone down way too far, and we should have a bounce. But what stocks do you ride? Look at ALK. You can go through every one of these. Look at this plummet. Do you really want to catch a falling knife in here? So are there any that look halfway decent? There's about 3. Here's one, CHRW. And these are the things we talk about on the premium site is we go over chart by chart to try to find where there might be opportunities. As you see here, maybe CSX, Delta acted awful today with good earnings, and it acted awful. So it's up all of, let's see where it is now. It's up $1.64, but we're talking about in this level here. We need to see a lot more stabilization in there. The rest of the airlines were up. AAL up 26 cents. UAL down for the day. And that's what I'm talking about. To get the leadership, where's it going to come from? I haven't figured it out. You're not going to tell me that's going to be the thing to lead the transports out of their doldrums. So I hope this helps. Like I said, on the premium site, we're going to go over a couple of earnings plays tonight. You have Netflix and IBM reporting and what kind of option activity I saw. We're going to go over some ledge trades that I'm seeing that could be great bearish opportunities. Even though we've already had a big sell-off, we could have more to go. So as you know, we have a $7 30-day trial. And also the chat room in the morning, I've been staying on an hour before the opening going over things, and it's been a huge hit. So I hope you could join us. Everybody have a nice night.